So let's discuss the vibrancy of this market with the guests joining us on the show as well. We have Abhishek Basu-Malik joining us. He's of course joining us from Intel Sense Capital as well. Abhishek, hi, good to be speaking with you. Let's discuss the market momentum right now, and it's clearly favoring the small cap and mid cap, right? What do you make of the way forward? Because on one hand, you always have that challenge that it's probably getting towards the frothy zone, the valuations are expensive in small cap, mid cap, but the market mood is such that they clearly want to buy more of that.
Good afternoon, and I think the point that you're making is very true in terms of that there is uncertainty in the minds of investors. But personally, I think that small cap, mid caps, we could be actually headed for a pre-election kind of rally, and it's going to be very interesting to see how the large caps behave. But next couple of months should be very interesting for the mid and small caps. And because we are seeing, elections coming up in India, elections in the US, both of which are significant events for the market, they could, sort of have or create volatility, which is going to be much more than normal. So that is something that we need to be all aware of.
Okay, point taken. So that's about the market mood right now. But just let's get deeper into the various segments right now. PSUs as the pack had done really well in the last 12 to 14 months, especially the likes of power, OMCs, even the other financiers, defense rails, etc. And not to forget the public sector banking names itself. What's the next 12-month crystal gazing telling you about the PSU sector as a whole?
See, I don't, really look at PSUs as separate as a basket. I mean, the only thing common about PSUs is their parentage. That the fact that they are owned by the government. But other than that, PSUs belong to different industries, different sectors. Each sector has its own dynamics. Each company has its own dynamics. So if I look at, say, a railways company versus a defense or a infra, there is definite tailwind in these segments, and companies which are large, which are either monopolies or very large duopolies in some of these sectors or specific industries, they will definitely continue to do well. So I don't want to bracket specifically that PSUs are going to do something different. But overall, there is definitely going to be a lot of focus on some of these, manufacturing, infrastructure, engineering, the core sector, if I may call it that, a focus on businesses in and around those core sectors.
Yeah, manufacturing, of course, is one space to really focus on because that has been doing well, and that India plus one or rather China plus one theme has been something that is spurring the rally. But, infrastructure has become a very large theme, right, in the sense that there is electronics manufacturing, there's, of course, auto manufacturing that has been doing well, and then you have your core L&T type of companies, industrials like ABB, Siemens, and then you have your, the road builders, etc. From this entire segment, which are the pockets you think are better placed?
See, personally, I'm personally very bullish on railways because I think there is continuous thrust from the government in developing railways. I'm also very positive on the energy transition that we are seeing. So, the entire renewables, wind, solar, that space. Also, obviously that would mean power generation, because if I look at data centers that are coming up, if I look at all the transition away from fossil fuels, that is going to impact power generation in a very big way, right? So these are areas which I'm obviously very bullish on. Again, real estate, not directly related to all of this, but real estate, both commercial and residential, has picked up after many years of slump. So usually when we see real estate as a segment picking up, it goes on for at least 2 to 3 years, and we're probably halfway there. So still some time to go for the real estate sector as well.
Point taken. But what about real estate as a pack? Do you think bulk of the rally is behind us, or there's a long runway for growth there as well?
I think there is some more runway to go. I don't know whether it's going to be long, but definitely it will. I don't think we are 50% there. If I have to if I have to think about it, I don't think we are halfway there. We probably less than that. So there is some way to go for real estate.
Way to go. But what about those dark horses or underperformers now, whether it's IT, whether even, with the banking, private banking, large names hadn't done as well and didn't participate with the market rally. Do you think some of these names could probably be the outliers by the end of this year?
Uh, IT might take a little bit longer. It might take a couple of quarters more for the earnings to start sort of bottoming out or starting to pick up. Uh, Private banking, I think, is now getting to a place where it starts to look interesting. So if you look at the larger banks, uh, or even the mid-sized private banks, they're starting to look interesting. But yes, I mean, people who have a slightly longer term horizon could actually look at both these. The other sector, of course, which is and other two sectors which have not been in the public limelight. One is chemicals, the other is insurance. I think time for insurance. I'm pretty bullish on. Chemicals, I think we are getting to the stage where we are probably seeing bottoming out happening in the businesses, and things could turn around in the next 12 months.
Point taken. Thanks so much for making time and speaking with us. Just marking a few more stocks before we go forward. Take a look at some of these